Welcome. I'm Sean Madison, registered Social Security analyst and licensed insurance agent since 2006. Today we're talking about guaranteed issue final expense life insurance. This is one of the more misunderstood products in the retirement planning space, and for good reason. The marketing around it is often confusing, the fine print matters more than most people realize, and the people who need it most are sometimes the ones least prepared to evaluate it clearly. Today we're going to slow that down. We're going to walk through what the coverage actually is, who it makes sense for, how it works, what the limitations are, and what you need to think about before you apply. No pressure, no sales pitch, just clear information so you can make a confident decision. Guaranteed issue life insurance is exactly what the name suggests. You are guaranteed to be approved for coverage regardless of your health history. There are no medical questions on the application. There is no physical exam. There is no review of your medical records. If you apply and you meet the age requirements, you will be approved. That is the defining feature of this product. Now, why does that matter? Because there is a segment of the population that has been declined for traditional life insurance due to health conditions. Serious diagnoses like heart disease, cancer, COPD, diabetes with complications. These are the types of conditions that make someone uninsurable through standard underwriting. Guaranteed issue exists specifically for that population. The coverage itself falls under the broader category of final expense life insurance, which is a type of whole life insurance designed to cover end-of-life costs. We're talking about funeral and burial expenses, outstanding medical bills, credit card debt, or simply leaving a small amount behind for a spouse or family member. These are modest face amounts, typically ranging from $2,000 to $2,500, and the policies are designed to remain in force for the rest of your life as long as premiums are paid. This product is not for everyone, and understanding that up front will save you time and money. Guaranteed issue final expense insurance is designed for a specific type of applicant. First, it's for individuals who have been declined for other types of life insurance due to health. If you've tried to get coverage and been turned down, guaranteed issue may be your remaining option in the life insurance market. Second, it's for people who have limited income and simply need a small policy to ensure their funeral costs don't become a burden on their family. The average funeral in the United States today runs between $8,000 and $12,000 when you factor in burial, the casket, the service, and related costs. Many families are not financially prepared for that expense when it arrives. A small guaranteed issue policy can solve that problem. Third, age matters. Most carriers offer guaranteed issue coverage between roughly ages 55 and 85. If you fall in that window and your health has made other coverage difficult to obtain, this product was built for you. If your health is reasonably good, there's a strong chance a simplified issue policy would give you the same coverage at a lower premium, and I'll cover that in another comparison shortly. The application process for guaranteed issue life insurance is genuinely straightforward, and that simplicity is one of the product's main appeals. You will not be asked about your health history. You will not be asked about diagnosis, about medications, hospitalizations, or surgeries. The application collects basic identifying information, your name, date of birth, address, and beneficiary designation. You select a coverage amount, you provide your premium payment, and that's it. Most carriers today offer over-the-phone application process, and some offer online enrollment. Approval is typically immediate or within a very short window. There is no waiting for a medical underwriter to review your file because there is no underwriting in the traditional sense. Now, this simplicity is a genuine benefit for people who need it, but it also comes with a trade-off that you need to understand clearly before you apply. That trade-off is the graded benefit period, and we're going to spend a little time on that in the next slide because it is the most important thing to understand about this product. This is where most people get surprised, and it's where I want to make sure you have complete clarity. Nearly every guaranteed issue final expense policy includes what is called a graded benefit period, typically the first 2 years of the policy. During this graded period, if the insured passes away from natural causes, the beneficiary does not receive the full face amount of the policy. Instead, they receive a return of the premiums paid plus 10% interest. So let me give you a real example so this is concrete. Say you purchase a $10,000 guaranteed issue policy. You pay $80 a month in premiums. 8 months later, you pass away from a health-related cause. Your beneficiary would not receive $10,000. They would receive the premiums you paid, roughly $640, plus the applicable interest. That's a significant difference from what most families expect. Now, there is an important exception. If death occurs as the result of an accident during the graded benefit period, most carriers will pay the full face amount. The graded benefit applies only to natural causes. After the 2-year graded period ends, the full face amount is in effect. From that point forward, your beneficiary receives the complete benefit regardless of cause of death. This does not make the product bad. It makes it something you need to understand fully before you apply. Let me give you a realistic picture of what a guaranteed issue final expense product actually looks like in practice. Coverage amounts typically range from $2,000 on the low end to $25,000 on the high end. The most common face amounts people select fall in the $10,000 to $15,000 range, enough to cover a funeral and leave a small amount for outstanding expenses. Premiums are paid primarily on your age at the time of application and the face amount you select. Because there is no medical underwriting, premiums are higher on a per dollar basis than what you would pay for a fully underwritten policy. A 65-year-old female might pay somewhere in the range of $60 to $80 per month for a $10,000 policy, depending on the carrier. A 70-year-old male would typically pay more, potentially $90 to $120 per month for the same coverage amount. These are general illustrations. Actual rates will vary by the carrier. The policies are whole life, which means the premium does not increase as you age, the coverage does not expire, and there is a small cash value that builds over time. You are not renting coverage the way you would with a term policy. As long as you pay your premium, the policy stays in force for the rest of your life. So this is a comparison that matters, and many people aren't aware that both options exist. Simplified issue insurance also falls under the final expense category, but it involves a short health questionnaire, typically about 15 to 20 yes or no questions. These questions screen for the most serious health conditions. If you answer no to all of them, you can be approved without a full medical exam. The advantage of simplified issue over guaranteed issue is cost. Because the carrier is taking on slightly less risk through basic health screening, premiums for simplified issue policies are meaningfully lower, sometimes 20 to 40% less for the same face amount. Additionally, many simplified issue policies do not have a graded benefit period. Coverage is often effective immediately from day one. So who should consider simplified issue? Anyone who has manageable health conditions but hasn't been formally declined for health insurance. High blood pressure that's controlled, type 2 diabetes that's well managed. These types of conditions often still qualify under simplified issue underwriting, and the savings in premium can be substantial over time. Guaranteed issue makes sense when simplified issue is not an option, when health conditions are serious enough that even the short questionnaire creates a barrier. For those individuals, guaranteed issue is not a lesser product, it's the appropriate product for their situation. Managing expectations here is important, and I want to be direct with you. Guaranteed issue final expense insurance is not designed to replace income, pay off a mortgage, or fund college education. It is a narrow, specific product with a narrow, specific purpose, covering end-of-life costs and leaving a modest amount for your family. If you are looking for a larger death benefit, this is not the vehicle for it. Additionally, and this bears repeating, the graded benefit period means that if you pass away within the first 2 years from a health-related cause, the full benefit will not be paid. Your family will receive a return of premiums plus 10%. That is not a penalty, it's a built-in feature of how the product is structured to manage risk for the carrier. But it does mean this is not a short-term solution for someone who is in immediate end-of-life circumstances. This product also does not build significant cash value in the early years. The cash value is a technical component of whole life insurance, but for the coverage amounts involved in final expense policies, the accessible cash value in the first several years will be minimal. None of these are reasons to avoid the product if it fits your situation. They are reasons to understand the product clearly before you commit to it. One of the strengths of guaranteed issue final expense insurance is premium stability. Because these are whole life policies, your premium is locked in at the rate established when you apply. It will not increase because you get older. It will not increase because your health declines. The rate you are quoted today is the rate you will pay for the life of the policy. This matters for people on fixed incomes. When you're managing Social Security, maybe a pension, and possibly some investment income, predictability is important. A premium that stays flat over time is easier to plan around than one that adjusts annually. The trade-off, as we discussed, is that premiums for guaranteed issue are higher than for underwritten products. If you are paying for the certainty of approval, that premium reflects the additional risk the carrier accepts by not screening for health conditions. What that stability also means is that the sooner you lock in coverage, the lower your rate will be for the rest of your life. A 65-year-old will pay less per month than a 70-year-old for the exact same policy. Every year you wait, the premium goes up, and your health can change in ways that affect your options. Getting coverage in place while you can is simply smart planning. Let me walk you through the mistakes I most often see in this space, because clarity here can save your family real money and real confusion. The first mistake is purchasing guaranteed issue without first exploring simplified issue. Many people assume that because they have health conditions, they can't qualify for anything other than guaranteed issue. That's often not accurate. A quick conversation with a licensed agent who works with multiple carriers can tell you quickly whether the simplified issue is an option. If it is, the premium savings are worth the conversation. The second mistake is not understanding the graded benefit period before purchasing. People buy the policy, something happens in year one, and their family is surprised by what they receive. Read the policy language, ask the question directly before you apply. The third mistake is buying too small a policy based on today's funeral costs without accounting for the future. Funeral costs have increased consistently over time. A $7,500 policy that feels sufficient today may fall short in 10 to 15 years. The fourth mistake is naming the wrong beneficiary or having no beneficiary on file. A life insurance death benefit paid to an estate goes through probate. That delays distribution and can reduce the amount your family actually receives. Before you move forward with any final expense policy, there are a few things I want to put directly in front of you. First, work with a licensed agent who represents multiple carriers. Final expense insurance is widely available, but premiums, graded benefit terms, and coverage limits vary significantly from one carrier to the next. An independent agent can compare across carriers and match you with one that fits your situation. Working with a captive agent who only represents one company limits your options. Second, understand that benefits vary by carrier, by product, and by individual situation. What I've described today is a general educational overview. Your specific rates, coverage options, and eligibility will depend on your age, the carrier you work with, and the face amount you select. This content is for educational purposes only and is not individualized financial or insurance advice. If today's presentation raised concerns about your own final expense coverage, whether you have the right product, whether you've been paying too much, or whether you even qualify for something better than what you currently have, let's have that conversation. Every situation is different. The right product for one person may not be the right product for another. What matters is that you have a clear picture of your options and a policy that actually does what you need it to when your family needs it most. Text LIFE to 702-605-6038 and I'll follow up with you personally. No pressure, no obligation, just a straightforward conversation about your situation.